Good afternoon, everyone, and a warm welcome to our latest and very special episode of QuickBooks Labs. QuickBooks Labs, a fortnightly podcast designed to be the place to learn all about the world of QuickBooks and other accounting software. I'm one of your hosts, Aaron Patrick, a chartered accountant and owner of an accounting firm called Boffix, QB Certified UK trainer, and that QuickBooks chap on YouTube. And joining me is, as always, my co-host, the one and only Ash. How are you doing, Ash?
Fantastic, thanks, Aaron. Yeah, so my name's Ash Peterson, also QuickBooks trainer in the UK. Used to be involved in doing lots of accounting type stuff. Now more into the app area, sort of behind NetTracker fixed asset app. So, Aaron, how does this all work?
Very good question. So, okay. Well, first of all, we are live to the nation at a regular time of 4 p.m. on a Tuesday. May not be that time this time, next fortnight, but more on that later. So normally you can come and join us on a fortnightly schedule around about the 4 p.m. normally on a Tuesday. If not, though, and if you're listening to this back at a later time, then why not think about joining us live? Why would you want to join us live, I hear you ask? Well, that gives you the opportunity to ask us any questions. So you can ask us questions in the question box on the right-hand side, and we then will go ahead and answer them accordingly. Furthermore, we're now live on podcasting services around the globe, so feel free to subscribe on the podcast service of your choice. Ash, what's the agenda for today's show?
Well, Aaron, I think you've got some hot news for us, and I can't wait for that to be spread, as I say. Then we've got a little tip of the week that we'll take a look at. I was hoping to have a guest with us today, but we'll make up another little tip. I've got a couple that I can sort of dig out. And then any questions that anyone has, if they're attending live, they can throw a question at us where we will give a response completely free of charge. You don't get this anywhere else, I've got to say. Two QuickBooks experts providing their services for free. You can't get better value than that.
It sounds like an absolute bargain.
So,
brilliant.
What's the news then, Aaron?
Yeah, this is a bit of a big one here. So let's move over and let's show the screen. Okay, Ash, this one could be a little bit decisive in terms of people liking this feature and not liking this feature, but it's here and it seems to be here to stay. So first and foremost, in front of me is a copy of QuickBooks itself. Now, it's nothing special about this particular file. One thing to note about it, though, if I just go up into the admin section at the top, company cog, accounts and settings, and you'll notice that when I come to company type, we have sole proprietor, which is basically your sole trader. And if you've not seen this before, basically you can drop down here and choose what type of organization you have. Now, for this particular one, we have a sole trader selected. And on select sole trader accounts, and it seems to be around about 20% of the accounts at the moment. So if you've got a sole trader account, just have a look and see if this is here. But you will notice that there is a element down the bottom here under taxes called self-assessment. So if I click into the self-assessment section, just like on QuickBooks Self-Employed, on QuickBooks, and bear in mind this is the full version of QuickBooks now. So this is QuickBooks Online. So that's for Simple Start, Essentials, and Plus. It seems that we have now the option to do a self-assessment directly in the product. Now, as it stands at the moment, the way that it's been set up is we only have an option to view an estimate, but we are very much informed, and we can see from the way, if you look at all the literature that's been released with it, that there'll be an opportunity to file your tax return directly in QuickBooks later down the line. So before we look into any further, Ash, what's your thoughts so far? Are you kind of fuming? Are you excited? How are you standing?
I'm really excited about this, Aaron. I can't lie. I mean, I love it. I can see some accountants might think, "Ooh," and I can sort of appreciate that because some clients might jump on this and start digging away, thinking, "Oh, my tax estimate is this," without having a proper review first. But at the moment, I think it is a fantastic addition, and I think we were only talking about Simple Start versus QuickBooks Self-Employed almost a month ago. where I was saying I wish that that tax submission feature was available in QuickBooks Online, and it's almost like my my wishes have come true, if you like. So great, fantastic. Show me more. That's what I say.
Yeah, definitely. I mean, it is for clients, it's a huge thing. It's absolutely brilliant for them. One of the worst things you can have is coming up to a year end and not knowing what your tax bill is going to be, and if anything, like a lot of my clients, burying their head in the sand and not knowing until the last moment what their tax bill. At least with something like this, where you've got that estimate being created for you, if you can keep that money to one side, you're going to be in a really good position in terms of being able to afford that tax bill at the end. So just a few clarifications to how to get this to work, though. Notice that you need to make sure you've got a bank account of some sort connected. Now, it doesn't necessarily mean that you have to physically connect the bank using the auto enrollment and open banking solution and be able to actually physically connect it. I've just updated this via a CSV file, so I've uploaded the bank information manually, and it seems to have worked. So just if you do have a file that has this, you need to make sure you've got a bank account at least connected or at least working for it to work. So what happens is you press this view estimate button to begin with. As soon as we press the view estimate, it does give you this bit of a disclaimer. So basically it's telling you that it's designed for sole traders who use accrual accounting. And what that basically means is if you're not just relying on the money going in and out of your bank account, but actually you're thinking and considering using it for invoices that may not have been paid or bills that you haven't paid yet. So it's going to take into account anything that's in a particular tax year that's not actually been paid. Need to submit a self-assessment return for 6th of April 19 to the 5th of April 2020. So I've got a bit of humble pie. Me and Asha, when we first heard about this, I was adamant that this was going to be for the 2020 to 2021 estimate, but actually no, it is looking at the tax return that people are going to have to file by the 31st of January 2021. So the next, basically the tax return period, filing period we're in now, that can be filed at any point now. So it is looking back at last tax year, effectively, the one that's been enclosed. It's not just starting to build up for the current tax year, if that makes any sense. Don't have any disallowable expenses. Now, the reason for that is because it doesn't give you an opportunity yet in QuickBooks to state if a transaction is disallowable or not. And they say you are VAT registered. Now, that's a bit of a curious one for us. We're not 100% sure why that would be a massive issue or massive difference. But at the moment, that's what this kind of beta version, if you like, or the first iteration of the self-assessment tax return is based on. So once you've got and you're happy that that's done, and also disclosure on this particular file, I've not set VAT registration up whatsoever. So even if you're not VAT registered, you can still at least be able to access this element. You press the Got It button. And from there, it gives you this new view. And this whole point of this new view is to give you an estimate of your tax at this point in time. So in the top left-hand corner, it's giving you an estimate of what your income tax will be based on the information that it's got in QuickBooks. It also gives you a date at which the information needs to be submitted and what tax year it's related to. We assume later down the line, you're going to have an opportunity to move between these tax years so you can see multiple tax years and how you're doing. It's going to bring in information. Now, notice there is no opportunity here to interact with these numbers at this current state. So you can't go in, change the numbers around, or go in and edit the numbers at any point. This is going to bring the information directly from QuickBooks itself. So it's giving you your annual turnover. And I'll show you later where we got these figures from. But basically, all this data, it's all estimate data, and we've just thrown this into this file. It's also going to bring in all the other elements you might have to consider as a business. So it's got your cost of sales, basically the same boxes that appear on a tax return. So you've got wages, and we've got rent, and we've got phone and telephone sort of things coming through as well. That gives us the amount of expenses. Now, curiously, they call it allowable business expense. So if you do have a disallowable expense, and the only way you're going to be able to achieve putting it on the software at the moment is to not post it against P&L. So things like depreciation and things like that, it's going to be weird, but we've just got to find a new way of being able to bring them in. We've also got our business income less our allowable business expense means that we have a net profit of £14,000. And with that £14,000, that's where the estimate is being created. So £325.94p of estimate. And then it also brings down the bottom here your class 2 and class 4. One thing that you have to bear in mind then when using this is you've got to add these two figures together to give you an indication of how much is due. What do you think to that, Ash?
I think it's great. Yeah, it's really, yeah, I mean, it really should make everyone's life, hopefully easier in the long run. I'll sort of go back a step there. I'm slightly distracted. Sorry, I think our guest might still be trying to join us. I was trying to take a look at a message there.
Yep.
I'm still curious on the VAT. Did you try to switch it on without switching on the VAT first, or would it just not play?
No, I've not switched on this particular file. There's no VAT on whatsoever,
Right.
which is why I'm really curious about that statement that it's designed for VAT registered companies. It doesn't make sense.
Cool. So, I'm a bit flummoxed on that one too. So
yeah, it doesn't make sense at all.
So you didn't need to switch on VAT, and it still worked.
No, again, the only things I've had to do on this is make sure I had it set into my accounts and settings as a sole trader, and then B, and again, we're not sure why this isn't a reason or there's a why we've had to do this, but at the moment we have to make sure that our bank account at least got some transactions going through it. If you don't have any bank accounts connected, and again at this point all I've done is use a CSV file, then you just get zeros coming up, even if you have got other transactions within QuickBooks. So it is a weird one. It's one of those where I'm not 100% sure why you have to have the bank connected, but we've seen this before. So cash flow forecast, for example, you can't do anything. You can't put that into, or you can't even look at the cash flow forecast unless you've got a bank account physically connected, not just as a bank statement. So I feel like the QuickBooks is almost protecting themselves, if you like. They want to get data in there that they can rely on. So it will only really start to interact if you've got that bank account connected.
Yeah, it makes sense really that you have got plenty of data in there. Strange, I guess, that you don't have to connect, but then I get with that being said, it's unlikely, unless you're trainers like us, that you would actually import a bank file unless you actually had a bank account. So, it does make sense. You're trying to get your bank information in there one form or another, either by connecting or at least you've got that bank fee CSV uploaded. So there's plenty of data in there. So at the moment, with regards to how it's actually put the income and expenditure in the different sort of pots, how does it pick that up?
So at the moment, it's all based on what category we've posted to. So if I jump into just looking at my trial balance or P&L, let's just do a P&L and do last year, you'll notice these are the same figures that it's bringing through. So there's your 25k of sales. Now, some of that is actually an invoice that I've created. So I just quickly create an invoice and it added that in as £20,000. And then the rest of them are directly from the bank. So it's interacting with both of them. It's bringing those transactions in for us. It's putting them in. But when it comes to expenses, you'll see that they've just taken them directly from the bank account. And it seems to be from the detailed element. So if you know from when you do your chart accounts and you get to choose what the detail type of it is, it seems to be coming from there. So depending on what detail type these fall in, so rent against the rent and wages against payroll, it's just going to put that information against the relevant pots.
That makes sense because a few years ago when we first started training, we used to get asked what's the difference between the detail and the ordinary type within QuickBooks. And in the US, they've been using QuickBooks for years and years, desktop and online, and they've been able to file their tax returns for years using Intuit software. And I'm pretty sure their tax returns are all based upon that detail type. So it does make sense that the UK is going to follow whatever we've got in there, because we can't, as users of QuickBooks, add any more detailed types in there. We are limited, so it makes that job easier for the programmer to make sure that detailed type has got to equal that box on the tax return. Job done.
Exactly right. Exactly right. And I think it's also, it gives us a reason why detailed type is there. And I think also for us, it just means that as an accountant, that's kind of another kind of almost role for us, if you like, in terms of making sure the detailed type's going to the right one and things like that. So, unless you're, understanding how the tax return works, it's just something you might want to just consult with someone just to make sure those detailed types are right going forward. Because like you said, we tend to, when we were teaching or when we do teach chartered accounts, we tend to kind of explain to people not to worry too much about detailed type. But actually now it seems like it could be something that could be important going forward.
No, you're quite right, Aaron. Yeah, it is something that we haven't had to worry about. And in fact, I've spoken to other accountants in the past that, when it comes to the detail type, the comment I had once was, "Oh, well, I just ignore the detail type. I don't even bother looking at it." Well, I mean, I've always tried to get it fairly level, only because just the way I am, and that's how I sort of thought about it years ago. But yeah, now I think especially, it's going to be more and more important to get that tax return, just as you want it.
Definitely. Brilliant. I think the guest has arrived actually. So shall we bring him in? And is there anything else you want to talk about the self-assessment or?
No, I think all
so
good on that, Aaron.
Space, isn't it?
Yeah, excellent.
Yeah, watch this space on this one. We're going to keep an eye on it. So if there is any developments and if it does anything else or we find anything more, then definitely. And we'll make sure we bring it up on a future episode as well, so we can see if there's anything extra that's come through and going from there. So let's bring on our guest so that he's not just sat there in the wings. Justin.
How you guys doing? How's it going?
Oh, hi, Justin.
How are you doing, Ash? Hi, Aaron.
Yeah.
How you doing?
Excellent. Oh, you throw me, Justin. I thought I had you down as Jonathan on my.
I don't know why. No. I came in. Jonathan. Yeah, he wasn't available for this one, so I came in.
Okay. Thanks, Justin. Thanks very much for joining us. So, Justin, before we talk about a accountants accelerator, tell us a little bit about your stuff. And Justin, what's your background?
So I'm actually from a finance background. So I actually spent a couple of years at Grant Thornton, spent 6 months at Friedman LLP in New York. So straight finance. I studied the CA, Chartered Accountant degree. And I experienced a lot of frustrations in the finance industry, and I wanted to kind of make a change and just kind of like create a different way of accountants, like a different way of thinking about business. That's essentially what I've done.
Cool.
And
Excellent. Well, thanks for that, Justin. Okay, I'll tell you what, Justin, why don't you tell us all about Accountants Accelerator? I've had a little bit of a look at your website, but I don't know how you want to work this. If you've got some, you can take control of the screen and take us through any slides or anything on your website you want to take us through, or just talk us through generally what you do.
Okay, cool. I mean, I could just talk you guys through it. I mean, basically, fundamentally, like what I found in doing my articles and working in finance for so long is that, I found that accountants they don't have a lot of choice when it comes to the people they work with. So they'll end up getting poor quality clients. They'll end up kind of working these crazy, ridiculous hours and not really appreciated. And, sometimes you'll end up with clients that are just not good quality. Not all the time, but some of the times, you have clients who take advantage. Their books are a mess and all that sort of thing. So during my articles, I looked at a lot of different ways of kind of making that more and more efficient. And I just didn't have the tech to kind of make that happen. So then when I was in New York, I realized they were using like a lot of different tools to acquire new clients. So like they wouldn't go about the approach of making the existing clients better. They would just say, if these clients aren't good, we're just going to get rid of them and find new clients. So when I started doing some digging, I kind of found that they were really making use of a lot of tech and social media and different kinds of CRMs, different strategies actually to get new clients. So what I did is I partnered with a friend of mine who had been in marketing for I think 6 to 8 years, and he was kind of doing a whole bunch of different industries. And I said to him, look, there's a real gap here for accountants. They really, really struggle with sales and marketing. Why don't we just focus on that and really try to come up with a good solution? So we worked with a bunch of different accountants in different countries, actually, different industries. And we've kind of come up with a very pretty solid solution now for them. And so what we basically do for them is we set up prospecting engines through automation. And there's different kinds of strategies we use. A lot of it is LinkedIn automation. So it'll go about automatically messaging specific people in a specific niche. And of those people that you reach out to on an average monthly basis, between 12 and 20 would respond with, yes, let's have a conversation. And we give them sales training and show them how to close the lead. In terms of software, what we use is we just use a CRM, and we pretty much have our own kind of CRM software that sends automated texts and messages and emails to the lead. That gives them a little bit more information about who we are, what we do, and all that sort of thing. Especially for accountants. Yeah.
Yeah. I mean, that sounds great. I mean, I'm sort of pretty much out of the sort of accounting zone myself, but I know from experience when I sort of was running my own bookkeeping practice just on my own, I definitely had a few clients that I didn't really want, and after time, actually, because I was getting heavily involved in sort of the QuickBooks training, those clients I didn't want, I sort of did let them go after a while. So yeah, I've been there for sure, and it is difficult to let clients go. Unless you've got something else to come in, because otherwise you're stuck doing jobs that you don't really want to do. And
exactly.
Yeah.
I mean, you're in such a weak position. I think that's fundamentally the problem. Is you're in such a position of weakness because your only way of getting new clients is a word of mouth referral. And if your network is kind of disintegrating or closing up businesses, or people aren't always so comfortable with referring, you're in such a weakened position. And another thing that we found is that when accountants refer people, and it's a word of mouth referral, they can't increase their prices. So if you're charging one guy £300 a month, you can't all of a sudden say, give me a referral and charge a referral £600. You have to charge him the same price. And also you can't reach different, I mean, it's a digital world now. I mean, we're working with clients in the UK, we've got clients in America, and we want our accountants to take on the same thing. So we've got a Canadian who's servicing Americans, and we've got and that's fundamentally what we want. We want to have virtual CFOs, virtual bookkeepers. We don't really want people kind of going in and having those, that's just the old way of doing business. So that's basically what we're fundamentally trying to do.
Oh, excellent.
And it's a good time for it as well, isn't it? With all the technology we've been talking about with QuickBooks and Xero and all of the kind of cloud-based ones, having that virtual assistance has never been easier for clients, has it?
Exactly. And also not only that, like Zoom meetings, I think people are becoming more and more comfortable with kind of like meeting with people over Zoom and actually signing on. I mean, we've had a lot of our clients have signed on people over Zoom calls. We've signed on people over Zoom calls. And I think that's something that, we've had to kind of break, because there's some belief systems we had to break with accountants, like the biggest one for me, and I had this breakthrough, which is why I want to give it to other accountants, is for me, as an accountant, I always saw marketing as that's like a P&L, it's a profit and loss line item, it's an expense. Keep it as low as possible. If you can not spend on it, don't spend on it, and focus on your balance sheet, focus on your revenues. The bottom line is that if you get marketing right, it can be a bigger income generating asset than anything on your balance sheet. There's nothing there's no asset you can invest in that's going to bring you a return quite like good marketing, not just any marketing. Good marketing, and kind of I had that realization, and I want that for other accountants, because I think it's a different way of looking through business. You can't just look through business in lines of like cash flow and budgeting and I mean I have accountants, even guys that I worked with at Grant Thornton that phoned me and asked me for advice, and they're just not willing to lay out like anything on marketing. I'm like, I can't help you, man. Like you have to spend money in this game. Like otherwise, it's just and it's not because they're cheap. It's just because of 8 years of being pumped with like keep your keep your costs low, like keep the P&L and all this sort of thing, which is like, it's very hard to grow a business, like, you know, when you see it that way.
And it must be hard for clients as well, because as accountants, we're trying to be business advisors. We're trying to teach clients better ways. We're trying to explain to them that, you know, this is how you're going to improve your business. And if you as the accountants aren't doing that as well, and if you're not following the same advice that you're giving out, then you're kind of almost giving out the wrong advice, aren't you? So you've got to grit your teeth a little bit. You've got to cut yourself with the big boys, if you like, and you've got to kind of go through them sort of pain points as well, haven't you?
Definitely. You just got to get like a different way, a different perspective. Like, I think it's always good having multiple perspectives on business. You know, there's so many aspects to a business. And I'm learning that, I mean, from running this business, I've learned that, you know, there's different angles. There's the legal aspect, there's the financial aspect, there's the marketing, there's the sales. And it's like, if you can just kind of open up these different avenues to seeing a business, it makes you just a way better entrepreneur and more rounded. Like, that's fundamentally what I found in this space.
I think, I mean, you're definitely right, Justin, because I mean, so now I'm not really do so much accounting work. I've got my app to try and market, and even as a very small company, you know, I've had to spend a fair bit of money on, you know, marketing and, you know, putting, you know, whether it's Google ads, whether it's Facebook ads, whether it's, you know, putting an ad with an editorial on a sort of a US sort of, you know, magazine, internet magazine. I'm able to, you know, to spend money, and an accountancy firm, you know, should definitely think about how to do the same. And I know because from someone that has to try to market to accountants, I know that accountants don't like spending money.
Oh,
you know,
right.
they absolutely hate spending money. I'm an accountant. I don't like spending money. But at the end of the day, if you want to, gain business, if you want to become more efficient on doing certain things, sometimes you have to spend a little bit of money, whether it's investing money in software, investing time on doing things. There are investments to be made before you can reap the rewards, first of all. I mean, I spotted on a Facebook post, it must have been a couple of months ago, after, you know, Intuit had published their sort of annual figures, and the amount of money they spend on marketing and PR is absolutely off the planet. I can't remember. It was a billion plus. You know.
Yeah.
You know, they're right up. You know, their marketing spend is like the highest thing that they spend. And
yeah. I've seen some mind-blowing things, because I've pitched so many accountants in the UK and in the US, and the ones that are really crushing are spending astronomical amounts. Like, I'm talking, like, I've spoken to people that were spending $20,000 a month, US dollars on marketing, and I was just like, but their revenues are like through the roof. They're eating up all the market share, and like, yeah, and then you know, you get on the call with someone and you tell them that some of the software cost is £100 a month, and they're like, no, I can't afford to take on a risk like that. So it's like they can't compete. That's the problem, is that and I think fundamentally what I've definitely learned as well is that a lot of the people that are starting their own accounting practices and stuff, they're actually just general accountants. So they're not actually entrepreneurs. They're more just accountants, and they don't realize when you make that shift. So if you go from, you know, you're an accountant, you're a financial manager, and you're working in someone's business, and then you go out on your own, or you're an auditor, you're in an audit, and you go out on your own, you're no longer an accountant. You can't run your business like that. You're now an entrepreneur. So it's now about like, okay, I've got to do things slightly differently, because I think that works. It works quite. If you're just an accountant in a business, that's your job. Your job there is to go in, is to control the expenditure, make sure there's cash flow, make sure that you've got enough cash flow to pay salaries, make the business run. That's your role. When you move out and you're by yourself and you started your own practice, you're now an entrepreneur. So your role isn't like, let's keep it. It's now like, how do I grow the business? How do I market? How do I reach how do I make things better? It's not your primary. So I think that's fundamentally what I found a lot of. It's really, but I've really met some, even in the UK, I got on call with a woman. I couldn't believe how on the ball she was. And I can't remember what the firm was, but she was incredible. I was actually was very intimidating talking to her. She was like so on the ball, like so on the ball. She had such good marketing systems and sales systems in place. I mean, I think she had 4 salesmen. She had like 8 different strategies where she was getting leads from. Like when I told her I could generate her like 12 to 20 leads, she was like, what's 12 to 20 leads? She's like, no, I need to get hundreds of leads a month. And like, yeah, it's really blown, like being in the marketing space has really opened up my mind a lot to what goes on. It's been a great learning curve.
Cool, excellent. So I mean, from other accountants, bookkeepers that that are trying to start off. So how do they sort of get involved with the accounts accelerator? So how does that, how do they sort of come to you for help and advice?
So what we do is, we've got multiple methods of how we go about client acquisition. So we use organic Facebook, we use Facebook ads, and we use cold email. And then when the clients come in and they say, like, I need your help, we take them through pretty much a 3-month program where we help them pick a niche. So we help them like pick a specific niche. Why is it important to pick a niche? Is because you want to differentiate yourself from other accountants. So if you've got the problem with accountants, they're all saying the same things. They're all saying, I do tax, I do payroll, and I could help anyone. So what happens is that clients go into the marketplace and they're just like, okay, well, they're all saying the same thing. Let me find the cheapest one and go with that. So what you want to try to do in the beginning is pick a niche. So say, okay, I'm going to service the construction industry, and aim all your marketing towards that. So then you basically marketing yourself as a specialist accountant in the construction industry. So now, why is this important? Is that when you reach out to someone in the construction industry, they say, okay, this guy's an accountant for the construction industry. He probably knows my industry. He knows my pain points. And you actually will get better and better at servicing that industry. So you will really know and understand their pains, and you'll be a lot better at servicing them. Because if you're doing a whole bunch of different industries, you're not really a specialist, you're a generalist. It's the same reason why a GP gets paid £500 a consultation and a specialist gets paid a couple thousand. He's a specialist. He specializes in something. So as an accountant, if you could specialize in a certain industry, which is what we're getting our clients to do, then you could start charging more and you'll really become an expert and you'll do the work a lot quicker. So that's the first thing we do, is basically we help them pick a niche. Then we set up prospecting systems. So we use their LinkedIn to prospect to different people in their niche, in their area. And that uses all automation. And then we help them with sales training. And then we pretty much help them use the CRM. I could show you the CRM software if you guys are interested.
Yeah, that'd be great.
Yeah, definitely. Because I know in accountancy, the CRM solution is normally something that's kind of not thought about properly. I know we as an accounting firm, we went with the first CRM solution we found and didn't really understand any kind of difference of what else is on the market. But yeah, a decent CRM solution can be huge.
Yeah, I think it's pretty. Can you guys see the screen yet?
Yes, great.
Okay, so you see the CRM. Okay, cool. So this is pretty much, I mean, this is an example of one of our clients. So he pretty much, I mean, he went from, I mean, he's made, as you can see as the dashboard, he's done about $11,000 in sales. And this is just the dashboard. So you can kind of see the different leads that have come in, the meetings scheduled, the partners, the hot partner. He's doing more of like a referral program. So what we've got here is you've got an opportunities, and then the lead comes in. And what happens is when the lead comes, this guy's doing really good stuff. He's doing really well. You can see he's running different methods for getting leads, and he's using LinkedIn, he's using Facebook ads, he's using a bunch of different things. So what happens is the lead comes in, he puts the lead in here, and it shoots out a bunch of automated texts and emails to the person. So as an example, this guy will get an automated text saying, hi, Mike, thanks for showing interest. We'll be in touch with you shortly. Then what they'll do is they'll set up a meeting. And as soon as they set up a meeting, they just go ahead and drag this guy into meeting scheduled. Then once he goes into meeting scheduled, it initiates another campaign that sends out a different kind of string of emails and automated emails just to say, hi, Mark, thanks for booking the appointment. We're going to be speaking to you in the next week or so. And then they go further and further along the pipeline until they become successful. And then once they're successful referral partner, you can kind of move them in there and initiates a new campaign. And yeah, so that is basically the main part of it. There's also, these are just the different campaigns. You can build out different campaigns. So, you can change up what kind of wording you want to use and how you want to do it. And that's basically that's the crux of it. You can also build websites on here, different funnels. So I mean, yeah, this is what we do for our clients. As you can see here, we've got when someone unsubscribes, there's an unsubscribe page.
So that, I could see that. So from that first sort of page on that CRM, when you were looking through that calendar and bits were coming through. So is there quite the tight integrations then with LinkedIn and Facebook? Do you sort of link them all together?
So this one we integrate with. You can integrate it with Stripe, and you can integrate it with. We more use like Zapier, so we use a Google Sheet, and you'd put the name and number and stuff onto Zapier, and then Zapier would zap it into this opportunities tab over here, and basically initiate the campaign, and the different campaigns would start running.
Cool. So if you've got a Zapier integration, you can pretty much connect with loads of other things. So there's nothing, I guess, to stop you connecting sort of to QuickBooks or Xero if you wanted to, by having a Zap coming into accountants client accelerator, and then maybe once that client is onboarded, to actually be zapped into something else where they become a fully fledged client for invoicing or billing. Would it work like that way?
No, so we kind of keep this separate to like the QuickBooks and that sort of thing. This is more, I mean, our clients would basically just use the same, like go about things the same way. And this is just an added software they would use. So would give them access to this platform and a Google Sheet, and they would literally run this thing completely separately. So they would have, anytime a lead comes in from LinkedIn, they would add the name to the Google Sheet. The Google Sheet would zap it into this CRM, and the CRM would basically initiate the campaign.
Okay.
Yeah. I could show you. You could see you could add a whole bunch of clients. We've added a whole bunch of different clients onto here, so they're all kind of using it, and and they're all making good use of it. We've got our main kind of. This is our. I mean, we use it as well, of course. It's our CRM, so we use it as well. We've just got. We've got our whole bunch of opportunities. You can put different countries in with different pipelines. We've got North America. We've got the UK. And we've got just different, and each kind of bucket initiates a different kind of messaging sequence. Like if someone misses their meeting, we put them up into a demo no-show, so example like that. And then all that does initiates a new campaign that would say, hey, you missed your meeting. If you'd like to reschedule, click the link below. And the reason for all this stuff is that, we're working in a digital age now, and it's kind of, you need to know how to kind of build trust and build rapport over the internet, and a great way of doing that is through campaigns, like email campaigns. It gives people an opportunity to kind of click on your links, click on your social media, click through your websites, and it just gives them an opportunity to get to know you online, which is very, very powerful.
Definitely. And so how many sort of users? I mean, is it multi-user? Is it one sort of user? How would that sort of work? So if you're in a large firm, would you have each user has their own login? Will they come in there? Or is it?
Yeah, so you can add multiple users. If you've got we predominantly work with much smaller firms. So we'd have like 3 to 5 people. Like we don't work with big corporates or anything. But I mean, we sometimes have 4 or 5 people have got their own logins and their own stuff. And that's effectively how that would work.
And is there different levels of access for those users? So would one user be like the super user that can do everything, and then there'd be another user that can maybe see certain things, but they can't make any changes and all that sort of thing?
Exactly. Yeah, there's different users, and different people can do different things, because obviously you want different levels of security around certain things. So yeah, that's pretty much what this is. And yeah, that's basically our main software in terms of what we use for our clients, in terms of a CRM. What's also great about it is you can also actually, one other thing I'll just show you guys. Let me just check here. So what you can also do is you can when you make calls, so as an example, if you want to call this guy, you can call him over there, and it records the call. So all the conversations will come up, will be recorded, and they all come up. So if you've spoken to someone a few times, so as an example, we could look at someone like this. We've probably had a few conversations with them. So you could literally track back And okay, that's not a great example because I haven't had a chat with that person. But I mean, you can literally go in and listen to old conversations you had. So it records the phone calls. So if you had a call with them, sometimes you speak to people and you actually forget what was discussed. So you can go back in and listen to recorded calls on the software, which is pretty useful.
Yeah, that's very handy.
Yeah.
Cool.
Yeah, and that's pretty much the main software that we use. Yeah, and the other stuff we use is like an automation software, which just sends out automated emails. Automated prospecting on LinkedIn. And that's pretty much the basis for like in terms of tech and software. That's basically our whole thing.
Yeah, it looks awesome. And from the marketing point of view, then, do you kind of part of your consultancy, is that about giving them ideas of what to market? Because I know, especially for us as a accounting firm, we've always struggled in terms of what content to put out there and when and what platforms and all that sort of minefield that there is. So is that what your consultancy is all about then? Is that where you can kind of add value to people?
Correct. So on the consulting basis, we tell them, what to put out on certain platforms and how you would go about doing certain things on certain platforms. So how to get more followers on Facebook, how to post to your followers on Facebook, how to run Facebook ads, how to use cold email. Because there's so many different strategies to go about, getting prospects in. I mean, we use, and they're all equally good. Like Facebook is probably the best because it's inbound. So if you're running Facebook ads, it's inbound. So people are asking, inquiring to speak to you. Whereas if you do a cold email or LinkedIn, it's all outbound. So it's all you reaching out to people to say, hey, would you like to have a conversation? Facebook ads is definitely the strongest in terms of the strongest lead, but they all work. We've gotten clients from email. We've gotten clients from Facebook organic, Facebook ads, LinkedIn organic. So they all work. It's more about, the message and your niche and understanding their pains and problems. Which
cool.
We
have you got anyone on TikTok yet? Is anyone owning that social media platform?
I don't know many 16-year-olds who are looking for accountants.
Maybe one day, maybe.
One day, definitely. Some of them are probably making quite a lot of money on TikTok. So I suppose maybe you probably can find some kid.
I'm sure there's probably one or two. All right, well, thanks for that, Justin. So where do people go then to learn more and then to reach out to you? So what's the best way to sort of get in touch?
So you can just go to www.accountingclientsaccelerator.com. So you can check us out there. If you want a free training, like we're basically giving away a free training. Whoever is listening to this podcast, you just go www.accountingclientsaccelerator.com/CPA, and that'll basically give you free training. And the training is going to show you basically how to get clients using LinkedIn. And that's basically what that entails.
Excellent.
Awesome.
So, thanks. Have you got any more questions for Justin, Aaron? I think we've...
No, I think it was brilliant. It's definitely something we'll be considering at Boffic. So I think that's exactly what we need.
Awesome, guys. Thanks so much for your time. I really appreciate you having me on.
Yeah, no, thanks very much for joining us, Justin. Take care, and we'll catch up with you soon.
Great, guys. Cheers,
Cheers, Justin. Thanks a lot.
Bye-bye.
Bye now.
Well, that was great, Aaron. I'm sort of out of the accounting area in that respect, but I can sort of definitely see the benefits on that.
Yeah, it's one of those worlds where we've learned the hard way basically in terms of what not to do and what to do and everything else, and we're still learning every week in terms of marketing and how to do it and everything else. But yeah, having someone who knows what they're doing and can guide you in the right direction is going to be huge, because if you get your marketing wrong, it can be a very costly mistake, put it that way.
Tell me about it. Tell me about it.
You've got the t-shirt as well, haven't you, Ash?
I've been there. So I think we've got time for a little tip of the week, I believe.
We have our new feature. I can't believe I haven't created an intro for it. I'm a little bit disappointed.
Let me just before I share my screen, I'll just get myself logged back in, because it's been inactive for a few minutes.
Just the least I can do is stick a little banner down for us. But it was good though, wasn't it? I mean, having that opportunity to bring an expert on who can explain to us exactly how it is, because yeah, like everybody said, having that opportunity or making the wrong decisions is not good for accountants, is it?
No, I mean, it's something myself, my sort of business partner have been talking about for some time. I mean, yeah, I'm basically the marketing person for my company as well as lots of other things. I'm trying to reach out to different companies, different, whether it's getting on somebody else's webinar, podcast, or whether it is doing a Facebook ad or anything like that. I've tried lots of different things, and it is, sometimes you do really need an expert that knows the best thing, and those experts, yeah, you sometimes do have to invest a bit of money.
Yes,
right.
Unfortunately, but we know why, because we see how complicated it is. I mean, I was just the other day having to go through trying to figure out Instagram versus LinkedIn versus Twitter versus versus Facebook, and it is a minefield, isn't it? So yeah, it is something worthwhile getting those right people on board.
All right, I'll just share my screen. This is a very short tip, but it could be handy. So let me just click on share screen. Make sure I got the right one up.
There we go. Wonderful.
Okay, so I've been looking at projects a little bit recently in the construction industry. And now, if you do use projects, so anyone that might be listening, watching, if you do use projects in QuickBooks Online, just open up a project. Then when you go to just towards the top right-hand corner of your screen, when you're in projects, you have this little option that's called hourly cost rate. And what that will actually allow you to do is that if you have any employees, you can add them and you can put in what they generally cost you. And it doesn't have to be what you pay them by the hour. It could be what that employee actually costs you through salary, if you average it out, plus then maybe their national insurance if you pay them a pension. So you can work out generally what that employee costs you per hour. So it could be an employee that is on your payroll. So if you are using QuickBooks Standard Payroll, it will actually it will link across. Now, it won't actually fire across. So if you record time, it won't put that time into the payroll. But these names are sort of linked to your QuickBooks payroll. But I could add another employee, let's just call him John, that actually isn't on my payroll at all. So if you're not using QuickBooks payroll, whether it's standard or advanced, you can just add the names in here. So they could be anybody. And then for that person, you can add, what does it cost you an hour on average? So I could add in a cost rate, and that person actually cost me, let's say, £30 an hour. I can save that. So what I could do then is that if I have someone that's working for me as an employee, I could ask them, or I could send them a user invitation as a timesheet only user. So the only thing that they can do in QuickBooks is actually record time. So if I were to put in some time, so let me go into employees, weekly timesheet, and enter some time in here for John. I've got John, and he cost me £30. So in sort of grayed out there, £30 an hour. And I'll put that he's working on 12 High Street, and generally he's worked every day. Over a week I've got in there on that time. 88 hours. 88 hours. Crikey, that's going some. So I'll just save that time. So you can mark time as billable time if you wish to, but you don't have to. You can just record the time against the job. And then when you are looking at your projects, so if I actually just click on that project that I recorded the time against, 12 High Street, then I'll immediately see that against that project, I've got the time cost for that employee, John, that's been working on that project, £1,200. So although I'm not actually recording an expenditure like subcontractor payment or even the wages and salaries, because they may be entered through payroll and journals created, which aren't directly linked to the project, a payroll journal isn't. But if someone's recording their time and we know roughly what that person costs us, then that's affecting that project. And if they were using a different payroll software, but they wanted to take the information from QuickBooks as how much time has been spent on a particular job, then what you can do, if I just go to the search box at the top and just type in the word time, I've got time activities by customer or by employee. So if I type time activities by employee, I could run a report over a specific date range. So it could be over a particular week. If I look at all dates here, so all of the work that's been done by sort of John over that particular week, I can see there's 40 hours there. So over that week, I could say, okay, he's owed 40 hours money. Then I can just pull those reports directly from QuickBooks. So just something a little extra tip there to bear in mind if you're not using the payroll in QuickBooks, but you still want to record those employees' times against your projects. So something there just to bear in mind.
That's brilliant, that is. And it's one of those features that never gets used, is it? The employee time tracking element of it. It's one of those things that always kind of seems to get forgotten, that the ability's there. But as you said, you got the opportunity to, if you need to be able to just have an invite only to the timesheet, so you can actually start dishing them out to the people who are working on them, and they can record it for you and go from there, can't they?
Yeah, I mean, I think it's a great feature, and I used to use it a lot when I had my own sort of practice and I was recording, the work that I was doing for people. If I was charging by the hour, I mean, I did sort of move away from that because we're all in value pricing or fixed pricing pretty much these days. But even after I went away from that, sometimes, it can be useful just to record the time, just so you can see, how much time am I spending on that client? I've got a fixed fee in there for X amount a month, but I'm recording this time just so I can see how much time am I actually spending, because quite often, and I'm sure you've done this, Aaron, you fix the price and then 6 months down the line, you think, actually, I'm not really earning anything from this client, that, I could work at the local supermarket and earn the same money. I definitely have undercharged before, definitely. So it's just something to bear in mind.
It is. And that's where projects really comes into its own, isn't it? Where you've got that opportunity just to keep an eye on things. And especially in the construction, like you've got an example here for the construction industry clients, it's invaluable, isn't it, for them to be able to see how a project's doing, if it's still profitable for them sort of things.
Absolutely. All right, Aaron. And I think that sort of brings us towards the end of today's session.
Certainly does. And I think we'll have to make sure we bring back a tip of the week every week now. I think that could be a new popular segment of the show.
Yeah, definitely. One little tip every week. I'm sure between us we can think of at least one thing. I'll have to start jotting some down, pluck something out from the tools we've used before. So our next podcast, vlogcast, webinar, however you'd like to call it, is won't be on a Tuesday this time because I am otherwise engaged, so I won't be able to do the Tuesday. So we'll be moving it to Friday, the 30th of October. So nearly Halloween, in fact. So Friday the 30th, same time at 4 o'clock.
Looking forward to it. Brilliant. And with that, then I think that's a goodbye from me.
And a goodbye from me. Take care, everybody, and we'll see you in 2.5 weeks.
Looking forward to it. See you all then. Bye for now.
Bye.